Hi, everybody. Thank you for joining us today for our payroll funding discussion. For those of you that need a refresher, this amazing Loanspark company is run by yours truly, me, but also by my co-founder, Michael. And as a reminder, what we do is we do strictly 100% B2B business lending. So we're lending as a service company. We enable all of you, our partners, to offer additional business purpose loans if you're not doing so already, or to simply become your bolt-on commercial funding partner. We engage on your behalf with the customers directly, although, as you will see in our newsletter later today that's going out, we are adding an additional service line starting next week where you can broker through us and we serve just as your processing and funding team. So you don't have to be hands-off anymore. We have over 300 lenders, including us, that does the funding, and that includes payroll funding, which is what we're talking about today. Our Q2 numbers, or our recent numbers, I should say, we are at 59% approval rate right now. And for commercial real estate, our approvals are at 84%. And we're at 42% booking rate, or 89% commercial real estate. Booking rate means that just because you have an offer for the customer doesn't mean they're going to take it. So 42% of customers actually take their offer. That's more than double industry average. And 89% on the commercial side. So really high. We're proud of our numbers. We're proud of the work we do for all of our partners. Now, let's talk about payroll funding today. What is it? A lot of people refer to it as either payroll financing or a payroll loan or payroll funding. It's literally borrowing money only to pay payroll. So for companies that might be short on payroll, to pay their employees or to pay their contractors or to pay any of the people that work for the company, that's what this money is for. It's usually very fast, it's super easy, and I'll go through kind of the stipulations and anything else that's needed. And it helps the company ensure that, their employees are paid on time. So, some fun math for everybody on this amazing Wednesday, okay? These are 2024 stats. I found these to be amazing, and I want to share them with you. So, every other week is the most common payroll method, right? So companies more often than not end up paying their employees or contractors or anybody that's on payroll every other week. Now, 39.4% of all payroll in the US is from small and medium businesses. That's excluding public companies that are considered to be small and medium businesses. By definition, the way IRS or the American government looks at SMBs is anybody that has less than 750 employees or makes less than $40 million a year annually. So 39% payroll is coming from SMBs, which is pretty amazing, the power of the SMB community in our country. 65% of employees report living paycheck to paycheck. So imagine the impact when a company can't pay on time. Like if an employee is already living paycheck to paycheck, that really puts them in a much worse situation. 95%, 95.15% of employees are paid by direct deposit. So vast majority on direct deposit in the country. Very few are still getting manual, the paper checks that everybody used to get. Now majority of people are paid by direct deposit. 90% of employees say that they get paid on time. That means that 10% don't, okay? And 62% of businesses offer off-cycle pay increases. So instead of an annual increase, businesses, especially in the economy today, with inflation and the cost of living and everything else, they are forced to do increases for their employees or their team members off-cycle. That's more than half of businesses. At least 2 or 3 times per year, they're forced to increase payroll for their employees just to sustain good talent, not to lose them, just to ensure that folks are, not leaving the company. I find that to be a staggering number. 62% of businesses offer off-cycle pay increases, which If a business is not necessarily generating more money, but they're spending more to retain talent, it's no wonder that there are businesses that run short during payroll cycles and need help. Now imagine this, IRS, this number blew me away. IRS collects $2.8 billion per year for failure to pay penalties. If a company fails to pay employees on time, it usually gets reported. Now, if you are paying your employees through a PEO, right, a professional employee organization, or you outsource it to a payroll company, or even if you have an in-house team as a company, all of these entities are required to report to the IRS that you didn't pay your employees on time. And there's a penalty associated with that. So 2.8 billion annually, failure to pay on time. That's how much IRS collects for those penalties.
Oh.
It's a lot. It's a lot. And 53% of businesses fail to pay employees on time. That's more than half, because either they ran out of money or the checks they're waiting for from their customers is not coming in on time. That's a serious number, 53%. 39% of businesses, I mentioned this earlier, but 39% of businesses use POs or other types of HR and payroll management systems to help them with payroll and managing payroll and funding. And then 23% of businesses are planning to outsource payroll and not do their own by 2027. That's almost a quarter of all businesses that don't currently use outsourced payroll services plan to outsource it within the next 3 years. So I thought these were really eye-opening statistics for everybody to share. That leads me to, like, why are we offering payroll funding to SMB and business customers, and why we think it's so important? It's because all of this data backs it up. Now, how does payroll funding work? So a business will realize, whoever's managing it, right, will realize, oh, snap, I don't think I have enough money this week or next week to cover all of my payroll. Either the customers haven't paid me, the invoices expected didn't come through, maybe transfers or funding or something else. Funding meaning like an investment is not coming through. Whatever the reason, oh, snap, I'm stuck, right? And then that business would submit an application to us, to Loanspark. The application's super simple. It asks for business information, address of business, federal tax ID. It asks for owner information, who owns this company, is 100% ownership, name, contact information, their home address, what they're looking for, and how quickly, okay? Our team receives this application, we review it, we underwrite it, we facilitate it, we fund it in less than 48 hours. Everything gets wired, not ACH'd, to a business, because we understand that this is a special kind of loan that needs to be urgent. Now, sometimes we're able to do it in 24 hours, but just like anything in life, stuff happens, built in a buffer, okay? So, and I'll walk you through what's needed and how it works in greater detail in a minute. So yes, we wire the funds, and then ta-da, your employees get paid, which is great, because last thing you need is to be reported for those penalties to IRS. And also, like, it gives insecurity, work insecurity and instability to your employees, right, if you can't cover it. Okay, so payroll funding. Let's cover some basic pros and cons. The pros. It's super fast approval process. I'll walk you through in a minute, like, what's required and how it works. But it's easy to get approved for this because it's a specialty kind of a loan. There is no prepayment penalties whatsoever. There is no activation or draw fees, meaning some business loans, every time you need to deduct or borrow, there is like an origination fee sometimes, there is what's called a draw fee sometimes, there's an activation one-time fee sometimes. Not here. This loan, or these types of loans, at least through us, now I know some of our competitors charge activation fees and they charge draw fees. We don't, because we understand that this is like a tough situation. Last thing you want to do is get slammed financially for it. So no activation or draw fees. No personal guarantees are required here. It's a simple application. We only do a soft pull on credit. Now, the only con is the cost of capital is a little higher. I'll tell you what it is. Ours is bottom line super low, but when you kind of take a step back and look at it, it's higher because it's a weekly payment. Okay, and I'll walk you through that in a minute. All right. Now, let's talk about our specific payroll funding terms and what we offer. So first, let's talk about the actual terms. We're able to accommodate payroll amounts for the payroll period between $5,000 and $500,000. So we're able to do payroll funding for larger companies that have larger payroll up to $500,000 per pay period, and also smaller companies that only need, $5,000. The term length of these loans is only 4 weeks. Why? Because it's meant to be oh crap kind of a loan. It's not meant to be a long-term loan. This is an emergency situation payroll funding, right? It's not something that's a strategic long-term loan, although we offer those too, but that's not what this webinar is about. So up to 4 weeks, the payments are weekly. So first week, second week, third week, and we expect you to pay it off on the 4th week. The interest rate is 1.5 per week on the amount owed. So that's low for payroll funding. But again, the reason why we say the cost of the money is a little higher, because typically on business loans, if it's a monthly payment, right, it's lower. This is per week, but still very low considering the fact that you're in trouble and you need to get your employees back. So this is super low. I actually dare anybody to find me a lender that can beat that. You won't. We've tried. Okay, so 1.4 per week. Now, how does this work? Let's say you borrowed $100,000 to cover payroll. Okay, so the first week you don't pay that, it's 1.5% that week on the entire $100,000. Let's say then you make a payment of $50,000, then your interest is just on the remainder $50,000. Okay, so every week your amount goes down. So 1.5 per week is on whatever is pending or outstanding still. Percent of revenue is 33%. So for an example, if you need $500,000 for payroll, but your revenue as a company is $600,000, we won't be able to accommodate that. It's going to have to be, that's a lot. I see some of you giggling, and there's a reason why. That math doesn't math. So 33% of revenue, up to 33% of revenue, we're able to accommodate. Closing time frame, 48 hours or less, always good to build in a buffer, but typically never more than 48 hours. And it's a soft pull of credit. Again, the benefits are no collateral, no personal guarantee. We do have low FICO options, and I'll explain that in a minute. Super fast funding, one-time payment at maturity kind of a thing, and no extra fees whatsoever. Let's talk about the kind of companies that would qualify for this. We have a required bucket, which means this is the bare minimum that has to be met. And we have a preferred, meaning much easier and faster to get done. Time in business. A business has to be revenue generating for at least 24 months. This is not a startup thing. Like, you have to show that you are actually able to pay your employees over time and you actually are generating revenue as a business to de-risk this loan. The FICO minimum of 550 for the owner. This is not a personal loan, but the way business loans work of any time, including payroll funding, is that you have to do a soft pull on a business owner that's associated to the business to assess risk. Now, consumer lending is very black and white. It's easy to assess the credibility of a person based on a lot of different things. However, in the business, like, although this loan will never show up on the borrower's report, record, nothing. Like, the loan will never be associated with the business owner. We do have to do a soft pull for the business owner, okay? The monthly revenues have to be at least $25,000, okay, in order to qualify. And then the revenue source does not need to be validated. Like, you don't have to do credit card payments, nothing like that. Okay, so that's our bare minimum, how we can get somebody approved. What we prefer, and that will happen a lot faster, is same thing, 24 months in business. FICO a little bit better, goes a long way. Monthly revenue of 400K goes a long way. And if you do credit card processing payments, not required at all, but preferred, we're able to wire you everything typically within 24 hours. So that one's just easier and faster to get done because it's easier to confirm. The only docs that are required to get this done, it is so minimal because the idea is this is urgent. We don't want to trouble you. We just want to help you. Is our basic credit card application, which I highlighted earlier, a government issued ID for the owner of the business, 4 months of most recent bank statements, and a payroll report. If your business company is using a PEO or a payroll outsourcing provider that manages their payroll, they would have to request the payroll report from them. But if the business manages their own payroll in-house, then all they have to do, it doesn't have to be fancy, they can export the payroll report. Like if they're using QuickBooks, it's a simple export that shows us that they do have employees and that they have been paying them, just to validate that this loan is truly going towards payroll. All right. Now, key points to recap. I know we covered kind of a lot of information, but in a short period of time. And we will get into Q&A shortly. So key points. Our goal is to fund every single deal, not to turn it away. So we always work with the customers that you guys send over to us to figure out the best way to get something done. We actually got a payroll funding request late last night. Like it came in at 11:30 and we're already, it's 1:22 the next day. We're already in the process of getting that team funded. Like we collected everything from them and we're pushing it through right now. It's just so weird because right before I got on this webinar, I was like, oh my God, we're doing like a payroll funding right now for a company. So there's a super easy lead submission process. If you are not an existing partner with us and you're on this call, I will share with you shortly my contact information so you can ask me all the fun questions about how to sign up and how can you help my customers. For those of you on the call that are existing customers, you already know you have a way to submit leads or submit customers, and that's how you would proceed. Business as usual. The only thing you would do is if you're manually submitting, you would select from a drop down that this is payroll funding. And if you're guiding your customer to call in or to use one of the pages we have created for you for them to self-serve, then they will have an ability to show that they're looking for payroll funding. So super easy. Fast turnaround times on these applications because our system flags that's a payroll request, which means it's more urgent, most likely, than any other request, right? Typically, that's how it works. And then we have high approval rates, especially on these because it's so easy to get approved for these types of loans. Super flexible, very competitive terms. Like I said, it's only 1.5% interest per week on the outstanding balance of the payroll fund. And we handle it for you. Like you don't have to worry about it. We'll engage with your customers directly. All right. So you know why we do this. You know why you love working with us, because we really want to help businesses grow and thrive and make their path easier. And here are the contacts for you. So my information for anybody on this call that's not a current partner with Loanspark, this is how you can reach out to me to schedule time to speak or to learn more. For those of you who are already our partners and already work with us and we're already funding deals for you or starting to, Cray is your primary point of contact. His information is here on the right. Okay, so before we open for Q&A, just a reminder of the upcoming webinars we're doing. So we just completed our payroll funding webinar. We're also going to do the SBA loans deep dive in September in a couple of weeks. And after that, we have a series of 3 commercial real estate specific webinars. One is going to focus on cash out and refinances. Another one's going to focus on fix and flip loans. As a reminder on fix and flip loans, your customers don't have to be set up as a business. There's a lot of W-2 employees that do fix and flips. We're able to do that, okay? And then we're going to do construction loans, all sorts of type of construction that we're going to cover. And after that, in November, we're going to do a deep dive into equipment financing, because this is one of the more popular, along with commercial real estate. Equipment financing is also kind of top 3 product that we offer. We do leases and loans. So we're going to do another deep dive into that. It's a very popular program with us too.